In 1907, a 16-year-old boy with a thick Brooklyn accent shows up at 43 Exchange Place, a New York City skyscraper home to several Wall Street brokerage firms. He's looking for a job, but no one wants to hire a middle school dropout who barely knows how to write. After more than a dozen rejections, he managed to get a job at a small brokerage house on the 3rd floor called Goldman Sachs. Not as a broker, but as an assistant to the janitor. He spends his days shining partners' shoes and cleaning out their tobacco-filled spittoons. At the time, no one paid much attention to this random kid from Brooklyn, and they only referred to him as the boy, but only because they had no idea who he would become. Fast forward a few decades and that boy, Sidney Weinberg, was now the CEO of Goldman Sachs, the very same investment bank where he first started off as a janitor's assistant. He still has knife scars on his back from street fights as a newspaper boy, but Sidney is now the most powerful financier on Wall Street, steering Goldman Sachs through the Great Depression, advising US presidents and underwriting some of the biggest IPOs in history. This is the story of how a poor boy went from sweeping floors at Goldman Sachs to building it into the global financial powerhouse we know today. Our story begins in 1891 in the heart of Brooklyn, New York. Sidney Weinberg was born into a family of 11 children. His father was a struggling Polish-Jewish immigrant who worked tirelessly as a wholesale liquor dealer to support the family. But when his father remarried, the new wife didn't want Sidney around the house, so the young boy was pushed out to the street to fend for himself. Sidney disliked school and regularly skipped class to support himself, including selling newspapers at the Manhattan-Brooklyn ferry terminal and shucking oysters. In 1907, while working at the ferry terminal, a friend told him that a panic was breaking out on Wall Street. Sidney had no idea what that meant or what Wall Street even was, later admitting, "It meant no more to me than if you said it was raining." But he quickly found a way to profit from the situation. The panic of 1907 caused a run on the Trust Company of America, a New York-based financial institution. Hordes of anxious people lined up to withdraw their money from the bank. Sensing an opportunity here, Sidney decided to stand in the long lines with them. Not to withdraw money, he didn't have any, but to sell his place in line to others. He queued for hours at a time. When he got close to the front of the line, he sold his spot to a desperate late-arriving depositor and then quickly went back in line to work his way up again. This clever endeavor was Sidney's first taste of Wall Street, and he was hooked. After hanging out in the financial district and skipping class for a week, Sidney returned to school, but he wasn't welcome back anymore. The school expelled him in 7th grade. Thankfully, Sidney's knack for business caught the attention of his teacher, who wrote him a letter of recommendation to help him get a job. Letter in hand, Sidney set his sights where he now knew the money was: Wall Street. He landed a job as a runner delivering messages for 3 different brokerage houses at the same time. But when his employers discovered that he held 2 identical jobs with competitors, all 3 firms fired him. He was shocked and back at square one again. But 16-year-old Sidney couldn't afford to give up, not during this time of year. It was November 1907 and winter was making its way into New York City. He couldn't imagine staying out on the streets all winter long, so he started brainstorming some ideas. What type of jobs do people have that are indoors? Office jobs. Where are these offices usually located? Skyscrapers. Buzzing with hope, Sidney set his sights on Wall Street for a 3rd time. Looking for an indoor job, I walked into 43 Exchange Place, a nice-looking tall building, at 8 o'clock one morning and took the elevator to the 23rd floor. Starting from the top, I stuck my head in every office and asked as politely as I could, "Want a boy?" By 6 o'clock, I had worked my way down to the 3rd floor and still had no job. Goldman Sachs was on that floor and it was closing up for the day. The cashier told me there was no work but to come back. Next morning, I came back at 8 o'clock and started right where I had left off. This time, Sidney reminded the cashier that he had been asked to come back. The cashier then turned to Jarvis, the company janitor, and asked if he needed an assistant. Jarvis agreed, and Goldman Sachs hired Sidney as a janitor's assistant for $3 a week. Sidney knew that he was at the very bottom of the totem pole. While he would much rather have served as an assistant to a fancy Wall Street financier, he also knew that this job was a start, and it was the start of something big. As Jarvis' assistant, Sidney worked his butt off and did whatever needed to be done. One day, he was asked to bring an 8-foot flagpole uptown to Paul Sachs' home, the son of Goldman Sachs' first junior partner. When Sidney arrived at Sachs' home with the flagpole, he expected to meet the family butler, but Paul Sachs himself opened the door. Sidney knew that this was his moment. Demonstrating his unique ability to be friendly with men in high positions, Sidney impressed Paul with his energy and brightness, which prompted Paul to invite Sidney in for dinner. Now, he didn't get to dine with Paul himself, he was seated with the family servants instead. But hey, it was something. Paul started noticing Sidney's impressive work ethic around the office and promoted him to head of the mailroom. There, Sidney reorganized the mailroom, making it more efficient, which again impressed Paul. He knew that there was something special about this Brooklynite and decided to mentor him, teaching him the ins and outs of Goldman's investment banking business. But as you can imagine, this was far from easy. Remember, Sidney was a middle school dropout. How was he supposed to survive in the world of high finance with the education of a 7th grader? Paul sent Sidney to Brown's Business College in Brooklyn for a course in math and writing, paying $50 for the tuition and encouraging Sidney to clean up his rough language. Until he took me in hand, I was an awful kid, tough and raw. Paul Sachs gave me another $25 to pay for a course at NYU. He didn't tell me what course to take. I had never heard of New York University, but I sought it out. Lots of courses didn't interest me. One course was called investment banking. I knew the firm was in the investment banking business, so I took that course. I think it did me a lot of good. As time went by, Sidney developed his office skills and was promoted to Goldman's foreign department. By 1911, Goldman Sachs was issuing commercial paper using mimeographed sheets. Sidney became so good at making copies using the mimeograph that he won a $100 prize as the fastest operator of the machine at the New York Business Show. Certainly not the most impressive accomplishment on Wall Street, but as a 20-year-old aspiring financier, you take the wins you can. The young Sidney Weinberg was breaking ground and started fantasizing about the glamorous lifestyle a successful Wall Street career might bring. I had an expensive taste and used to sit behind one of those big desks after the bosses went home and smoke 50-cent cigars that belonged to one of the men I later became partners with. But by 1917, Sidney started getting impatient. He wanted to keep advancing at Goldman, but for some reason, he wasn't being promoted anymore. The US had just entered the First World War, and Sidney, shockingly, quit Goldman Sachs to enlist as a seaman in the US Navy. But Sidney was short and nearsighted, not ideal for a sailor, so he persuaded his recruiting officer to give him a job as an assistant cook instead. When Sidney met the legendary JP Morgan several years later, Morgan was delighted to hear that Sidney had actually served in the war. Following the war's end in 1918, Sidney returned to Goldman Sachs, but his old job was gone. He was told that if he wanted a job, he would have to create one himself, which he did as a bond trader. However, rather than simply speculating on which securities would appreciate or depreciate like most of his peers were doing, Sidney formed syndicates with other traders and personally oversaw the underwriting of new issues. As the 1920s roared on, Sidney became a recognized authority on bond pricing, and senior partners at Goldman started to take notice. He also began making serious money. In 1925, he bought a seat on the New York Stock Exchange for $104,000, and he proudly said that the money came from his own earnings as an investment banker, not from trading. None of it was from trading. I never traded. I'm an investment banker. I don't shoot craps. If I had been a speculator and taken advantage of what I know, I would have made 5 times as much money. Why didn't Sidney trade securities himself? Because to him, investment banking was all about serving as a trusted advisor to corporate executives and helping them navigate the complexities of financial markets. Instead of participating in the speculative market frenzy that characterized the 1920s, Sidney focused on long-term relationships with clients. He wanted to be a force of stability during a volatile period and believed integrity to be the most important trait in a banker, not too different from what Warren Buffett has taught us in the many years since. In fact, when Warren was 10 years old, he got to meet Sidney Weinberg at Goldman's offices, and Sidney left a strong impression on young Warren.
We went to Goldman Sachs. My dad had a tiny little investment firm, but I don't know whether it was a slow day during the summer or because this little kid was along or something. Sidney Weinberg invited us in, and he talked to me and my dad for at least 30 minutes. And as we left, he put his arm on my shoulder and he said, "What stock do you like, Warren?" I can't remember what I said in response, but it was huge. It was huge. I've never forgotten it.
Sidney had a quick mind for both numbers and people. When Goldman had been tasked to price a bond issue for the retailer Sears, a Goldman analyst had spent several laborious nights crunching numbers on an enormous spreadsheet. He had listed all conceivable interest rates on one side and years to maturity on the other side. As the analyst was unrolling his masterpiece, Sidney simply announced that the bonds would be issued at par with a 4.375% coupon. He was spot on for what would end up being the market clearing price. It was impossible to get anything past Sidney, and one Goldman Sachs partner explained that he could smell a rat a mile away. But Sidney had to learn this the hard way. He once sat on the board of a company called McKeeson and Robbins, which was controlled by a man named Donald Coster. Or so everyone thought. Coster's real name was in fact Musica. Musica wasn't just an imposter, he had overstated the company's earnings for years. The company ended up filing for bankruptcy and Musica committed suicide. When Sidney found out about Musica's death, he simply said, "Let's fire him for his sins anyway." In Sidney's world, mistakes were forgivable, but dishonesty was unpardonable. He was tough as nails and ultra competitive, but he never compromised on his ethics, a mindset that would eventually pay off. His big day came in 1927 at the age of 36 when he was asked to become a Goldman Sachs partner. This was a tremendous achievement. Sidney was only the second partner at Goldman Sachs who wasn't from either of the two founding families. But being a partner also meant that his future was not deeply intertwined with the investment bank's performance. If things suddenly went south, Sidney's years of hard work could evaporate in an instant. And then came the Great Depression. In October 1929, 2 years after Sidney made partner, the global financial system collapsed. 1 in 5 Americans lost their jobs and bread lines ran miles long. Goldman Sachs was teetering on the brink of collapse. You see, in 1928, Goldman Sachs had created a highly leveraged investment fund called Goldman Sachs Trading Corp. The fund had invested heavily in public utilities, and as those stocks plummeted in value, the fund's highly leveraged structure began to crumble. Goldman Sachs Trading Corp's collapse, coupled with a global market decline, marked one of the darkest times in the firm's history. Investors lost confidence in the bank, the firm's reputation suffered tremendously, and for a time, it seemed that Goldman Sachs might not survive. As a partner, Sidney had to face the reality of not just his potential personal financial ruin, but also the possible dissolution of the institution he had committed his life to. He had worked his way from janitor's assistant to partner, and now his entire career was at risk of being destroyed. Goldman Sachs desperately needed a new leader, someone who was gritty, smart, tough, and someone who could do what had to be done. Howard and Walter Sachs decided to give Sidney Weinberg a call. In 1930, in the midst of the most severe economic downturn in history, 39-year-old Sidney Weinberg was offered the position as Goldman Sachs CEO, an opportunity that was both a test and testament of his character. The decision to promote him was an extraordinary leap of faith. The very survival of the firm was at stake, and Sidney, who had started with nothing, now had the responsibility to not just rebuild, but to reimagine Goldman Sachs. It was a role many would have deemed impossible, but for Sidney, it was the ultimate challenge. With grace under pressure, Sidney accepted the offer. He was under no illusion about the mountainous task that lay ahead of him, but his journey so far had been defined by his belief in his own potential and an indomitable spirit. The hardships of the past had prepared him for this moment, and he was ready to take on the Herculean task of guiding Goldman Sachs out of the abyss and back into the light. Sidney understood the need not just to restructure the firm, but to rethink the very ethos of Goldman Sachs. He set out to work on two main fronts. The first was to reinstate the firm's reputation and credibility, and the second was to innovate the way they conducted business. Sidney began making personal visits to all Goldman Sachs clients and creditors. He reassured them of the firm's commitment to its obligations and the vision he had for its future. In an industry where trust is paramount, Sidney knew that restoring faith was crucial to the bank's survival. His personable approach, frankness, and obvious commitment worked wonders, and slowly but surely, investors and clients began to regain confidence in the institution. Simultaneously, Sidney revamped Goldman Sachs' business model. He shifted focus from trading speculative securities towards investment banking, particularly IPOs, bond issuance, and M&A. His percentage participation in Goldman Sachs partnership increased from 9.5% in 1927 to 30% by 1937. Goldman Sachs was a family partnership, but people were beginning to realize that this was in fact Sidney Weinberg's firm. The defining moment came in 1956 when Goldman Sachs led the IPO of Ford Motor Company. The auto giant had been a family-owned business since its founding, and its decision to go public was a significant event. The deal was massive for the time, $700 million, and every investment banker on the street dreamed about taking the company public. Sidney had a unique ability to befriend anyone, and through his personal relationship with Henry Ford II, Sidney won the deal for Goldman. It was a massive triumph. Everyone assumed that Sidney must have been paid a fortune for his work, but he wouldn't tell anyone how much he actually made. Why? Because the Ford family only paid him $250,000, and he was so embarrassed for anyone to find out. From that point on, Goldman Sachs became a leading force on Wall Street once again. Sidney led Goldman for 40 years, saved the bank from its most trying period, and set it on a growth trajectory that would reshape the financial industry. The story of Sidney Weinberg is a testament to the power of resilience and the pursuit of one's dreams.